Hello, I'm Stephen Cruz with MyMortgageBroker.com and Paragon Mortgages, and today I want to talk about should I borrow to renovate? I have clients asking all the time about different ways to finance renovations, and this question comes up quite a bit. And so I thought we could review some of the renovation options and whether or not you should potentially do that and borrow when you want to renovate. So let me just change over and share my screen, and we'll go from there. Okay, here we are. So should I borrow to renovate? How can I finance a renovation and pros and cons of financing home renovations? And then we'll talk a little bit about whether or not you should do some renovations or what you could at least think about when you want to do some renovations. So how can you finance a renovation? There's a number of different ways. There are savings. If you had cash, you could finance with cash. You could take a personal loan or a personal line of credit. You could do a mortgage. You could do a home equity line of credit, or you could do a second mortgage. So each of those have some advantages and disadvantages. So let's look at those first. So savings. If you have enough money and the cash available, then why not just use that money to do your renovation? Then you don't have to incur any extra costs, no mortgage financing costs or any interest costs if you do a personal loan or whatever. So that is certainly one of the ways. Most people who come to me don't have the cash to do that, but you might be able to do that if you do. Second option could be a personal loan or personal line of credit. With a personal loan, personal line of credit, the interest rates are a little bit higher than mortgage rates. So you're probably looking at the 6 to 12% interest rates. You don't want to finance it on a credit card. And I have had some clients who've done that, finance some renovations on credit cards, and that's just not a good idea. The loan is typically amortized over 4 to 5 years. For lines of credit, generally, the lender is going to ask you to pay 3 or 2% of the outstanding balance, which works out to be a 3 to 4 year term over time if you keep those payments consistent. And so if we were to look at a $10,000 loan for personal loan or a personal line of credit, you're looking at payments anywhere from $200 to $300 per month per 10,000. So if it's 100,000, then it's 2,000. If it's a $100,000 reno, I wouldn't necessarily recommend a personal loan, and you may not qualify. Lots of lenders won't provide that size of personal loan for financing today. Typically, they'd want a collateral like your house or something else. So the next option would be a mortgage. So if you did a first mortgage, if you had no mortgage in place, you could just set up a mortgage. If you had an existing mortgage in place, then there could be a penalty. And the penalty will depend on the lender you have and how they calculate the penalties. And so sometimes there's a disadvantage of just doing a mortgage. And so that's why there are other options. We'll talk about some other options. If the mortgage is coming up for renewal and you're planning on doing renovations in the future, you could refinance it when it comes up for renewal, and then there's no penalty, and then you get access to cash. Right now, interest rates are sub 3% or really close to 3%. So the interest rates are quite good. Payments can be amortized up to 30 years on a home mortgage when you refinance, when you already own the home. You can finance it up to 30 years. The monthly cost on 10,000 would be around $47 a month to $42 a month if it's over 35 years, or sorry, 30 years. So you have 25 or 30 year amortizations. You could certainly do it over a shorter period of time, but for every $10,000 you're going to borrow on a mortgage, it's going to cost you about $47. So that's just, I did that to compare apples to apples. I'll do that for all of the different types of financing so that you can see how they work. Home equity line of credit is the next option. So with a home equity line of credit, you can leave the existing mortgage in place and set up a line of credit behind it so that there's no penalties to pay it out. And so it's also advantageous for you because the first mortgage, again, there's no penalty. If you had no mortgage, then you could just set up the line of credit. The nice thing about the line of credit is it's flexible. You can draw out as much or as little as you want. Interest rates typically set up to 80%. Set up at prime plus a half. Now here, you can go up to 80% of the home's value if it's in second position behind a first mortgage. But the maximum a home equity line of credit can go to is 65% of the value of your house if there's no mortgage. So I was thinking here, in this case, when I said 80%, I'm referring to having a first mortgage in place. And with that, you can set up a second mortgage home equity line of credit up to 80%. And on $10,000, the payment's around $38 a month, interest only. So you can see that it's not that much less than the mortgage payment for $10,000 that we talked about on just at the last slide. So next option would be a second mortgage. For a second mortgage, you again don't have to pay out the first mortgage, so there's advantage there that you don't have to pay any penalties. There are some disadvantages in that the interest rates could be higher. So you'd be looking at interest rates around 6 to 16%, depending on your credit and how close to 80 or above 80% of the value you want to go. There are some additional setup costs typically with a second mortgage. Mostly it's alternate lenders who offer these, and the setup costs, there's typically a lender fee and sometimes a broker fee to set this up. If we look at $10,000, the payment's around $60 to $130 per month. So the payment again is quite low in relation to an unsecured loan, but some of the costs are a little bit higher. And so the pros and cons of renovating, one of the pros is that you are going to be more comfortable. You can make your house more comfortable, more stylish, more modern, and you can potentially increase the value of your home. Some of the cons is that you might get into some more debt. So longer debt, paying off your mortgage longer. You may not get enough financing if you don't have enough equity in your house. You may not get as much money out to do the renovation. So you might not be able to do everything you want to do. The other thing with renovations that I've had with clients, had issues that clients have had is cost overruns. Sometimes you open up walls, do big renovations, and you find something in there that needs to be repaired or replaced or fixed, and it creates more costs than originally planned. Should you borrow to renovate? Well, it depends on your situation. Sometimes it's a good idea, and sometimes it's not. So you want to think about whether or not you're going to stay in your home for a long time. If you're going to do a large renovation, you don't necessarily increase the value of your home dollar for every dollar you spend on the renovation. So if you're going to stay there a long time, you're more likely to capture the cost back. If you're just planning on renovating so that you can flip the house and move on to something else, then sometimes doing less expensive things can improve the value and help you sell your house so that then you can move into the right house for you. So it's important for you to look at your timeline, and that is a big factor. Sometimes it is better to renovate. Your neighborhood's great, your location's great, your yard is big, or you got trees. Sometimes the home or the location you're at is just fantastic, and so staying in this location and renovating your home is better than selling and going somewhere else for a different price or whatever. So sometimes it's better. Sometimes it's better to sell. Sometimes the place just needs so much work that it's better to sell and move to another house. And I've had clients come to that decision too. Costs versus value. I mentioned that earlier. The cost of the improvement, you have to evaluate that against the value of your house and how long you're going to stay there. So if you're planning on staying there a long time, again, the costs, you can do something and be comfortable and be happy with your house. But if you're not planning on staying there a long time and you're going to do a huge renovation, you want to make sure that you are wise and strategic with the renovations you're doing. Considering the financing, you may or may not get enough money. So if you're planning on borrowing to renovate and you don't have any cash saved, you want to make sure you can borrow enough to do everything you want, or you might have to do it in stages. So finding out exactly how much you can get before you renovate is also a very good idea. So it gives you a bit of a budget and helps you with your timeline. You won't get disappointed if you know upfront how much you can get. And then considering your time and your family. When you're renovating your house, it could take 3 months, could take 6 weeks, could take 6 months, and there's your time and your family's upheaval in the house, and that can be difficult. And so you want to evaluate that and see if it's worthwhile for you to do that or not. I have had clients who've done some big renovations on their house and they've actually moved out. They've rented another place, got the renovations done, and then come back, which is really nice. But again, that's a cost that you would have to incur as part of your renovation costs. And again, the last question, I think the most important one that we've talked about throughout here, is how long do you plan to live in this house? That really is the key. Sometimes if you're just planning on moving soon, maybe a new paint job and some carpets or something might make your house more comfortable for you without having to do a major renovation that you won't get back if you sell it later. So if you enjoy the information that I provide on my channel, please press the subscribe button below and press the like button. To subscribe, you can go to my website, mymortgagebroker.com/YouTube, and that will take you to subscribe if you're not watching this on YouTube. Thank you very much and have a great day.